Hello from beautiful Hong Kong, guys. Today I'm hiking a little bit, so I just wanted to take this opportunity while I walk to talk about Hong Kong company and China company. The question is, do you need the Chinese company WFOE, or you need a Hong Kong company, or maybe you need both? So let's discuss quickly, guys. As we discussed many times before in different videos on this channel, China company is needed, absolutely mandatory, when you want to hire stuff in China directly, for example. Second, you want to be able to have a bank account, company bank account in China, in RMB, and pay your suppliers from that yuan account. Number three is you need a Chinese company if you want to provide invoices, Chinese invoices, fapiao, to your clients in China. And most importantly, you need a Chinese company if you want to be able to export products directly under your company name. Obviously, if you want to do that and put your company name as exporter on customs documents, then you need a resident company, which is a Chinese company. And there are a bunch of other reasons. For example, you want to sell on Chinese social media, open selling account, or you want to be able to sell on Chinese e-com platforms. You need a Chinese company. Hong Kong company cannot do that. Another reason why you need a Chinese company is maybe you want to apply for work permit, work visa, and relocate to China. That's a very strong reason why you need to have a Chinese company, because Hong Kong company cannot sponsor your work permit or work residence permit applications, because Hong Kong company is a foreign company in China. Very simple. Depending on your specific situation, your business, your goals, we can talk about different reasons why you need to have a Chinese company. Now, let's talk about Hong Kong company. Hong Kong, politically speaking, it's a special administrative region of China. That's why the name is Hong Kong, SAR, and comma China. But it doesn't mean Hong Kong has the same laws as in China. No. Hong Kong is a separate jurisdiction with its own laws, common law, versus Chinese civil law system. And Hong Kong has its own passport, its own borders. So basically, Hong Kong is a separate country. When it comes to doing business, especially, it makes a whole lot of difference, because there's a lot of different reasons why you might want to have an entity registered here versus mainland China. Why? Number one, I'm talking about the advantages now of Hong Kong as a jurisdiction. Number one, it's the territorial tax regime, basically. The golden rule here when it comes to corporate taxes is your company's global income will not be subject to Hong Kong taxes. Only the income derived from within Hong Kong will be subject to corporate taxes, which is first 2 million is like 8.5, and then after that 16.5% corporate tax. Second advantage, Hong Kong has a lot of banks, obviously, And those banks, compared to most of the jurisdictions, they are one of the best banks in the world. Really. Like HSBC, Standard Chartered, like DBS, all these banks, they offer you advanced functionality when it comes to transactions. There's no currency control, means like versus China again. In China there is currency control, meaning that you have to ask for permission for certain amounts. Just an example, ICBC Bank of China, they have 500,000 per day limit by default. If you want to increase it, you have to, you know, wait. There's a little bit of paperwork, a little bit of legwork, but in general it's doable, but still, you know, it takes a little time. In Hong Kong, none of that exists. You can transfer millions of dollars in a day without asking any permission from anybody. Another advantage, Hong Kong companies can be formed 100% remotely, unlike China. In China, you still have to attend. For example, tax registration requires personal visit of the director. In Hong Kong, it doesn't exist. You don't have to register for tax even, you know, until the company becomes 18 months. When the company becomes 18 months, you will get a notification from the Inland Revenue of Hong Kong saying that your first filing is due. And you don't have to really appear in person. Everything is remote, guys. And another advantage, obviously, Hong Kong and China have free trade agreement. So you can basically import, export without any taxes. Let me just pass this and continue. So due to these free trade agreements, a lot of companies use Hong Kong as kind of pit stop for their excuse me, for their re-exports. They want to export to some other countries and they use Hong Kong as a pit stop. And that is partially because of that free trade agreement. And also Hong Kong's port is one of the advanced and one of the busiest actually in the world. You can also Google that. Hong Kong port is really one of the important ports in the world. And so here are some advantages for both jurisdictions, guys. Now let's talk about whether you need both, okay? Because of this, you know, based on these advantages that we counted for both jurisdictions, you can maybe decide which one to have, China or Hong Kong. And now I want to also discuss, maybe you need both. Let's say you want to receive income and then you want to leave your profits outside of China. Let's assume your contract value, the total value is around, let's say $1 million, but your pure expense in China, let's say 500,000. Now 500,000 is your profit here. If you have that profit in China, your company will pay corporate tax. I cannot say how much directly right now, but it will be between 5 and 15%, something like that, because every company has a rate. If you Google, China has corporate tax rate of 25%, which is actually not a correct figure, because yes, the biggest rate is 25%, but still, you know, based on your company's volume, every quarter the tax office is going to give you your company a specific rate. So your 500,000 profit, if it goes directly to your China company, then it's subject to Chinese corporate tax, because China is not a tax-free country. So in this scenario, it makes 100% sense to have a Hong Kong mother company, okay, holding company. So instead of receiving this 1 million directly to your Chinese company, you receive it to your Hong Kong company, okay? Hong Kong company then transfers that pure cost of 500k to the China company. Then your Chinese company will use that 500k immediately, right? It will buy some products to export, etc., etc. Now your Chinese company does not have any profit, so there is no corporate tax. And then on the other hand, your Hong Kong company's income is derived from outside of Hong Kong, 1 million, and then leftover is 500k, like pure profit, 500k, not subject to Hong Kong corporate tax. You don't have to pay any tax in Hong Kong for this 500k profit. Why? Because simply Hong Kong has this rule, a law that we discussed earlier. Only the profits derived from within Hong Kong are subject to Hong Kong taxes. As you can see, this is one of the scenarios. One of the scenarios. There are so many other scenarios where you need both Hong Kong and China company. And also, when you have a Hong Kong parent company to your Chinese company subsidiary, then it's easier to repatriate your profits back to Hong Kong from Chinese company. If there are any profits in China, then you can just easily transfer back to the parent company, claim it basically, and that will be easier compared to other jurisdictions. For example, you might have Dubai parent company to your Chinese company, and then if you want to repatriate income, profits back to Dubai, it will not be as easy as in Hong Kong's case, like parent company in Hong Kong. So that's why it's recommended. And in Hong Kong, of course, as we discussed, your Hong Kong bank will be very strong, and you basically transfer the money out of Hong Kong. There's no restriction, no need to ask for any permission, or no need to apply for any license or anything like that in order to take your money outside Hong Kong. And of course, when you have these two companies in your structure, you can take advantage of this free trade agreement between Hong Kong and China. Some of the goods, for example, if you want to transfer, if you want to export out of China, but if you do it directly from China, it will be a little bit of problematic, because there is this you need to basically pay export tax in China, and you can claim it back, obviously, no problem, but still, if you don't want to go through all this hassle claiming back, then why don't you just export to Hong Kong tax-free, and then export from Hong Kong also tax-free? See, that is, when we talk about why you might need, Hong Kong parent company, we have to definitely consider your specific situation, and that's 100% true in most of the cases. There's no one answer fits all. It doesn't work like that. You cannot say that, oh, my competitor company doesn't have Hong Kong, they directly have China. Well, maybe they don't need it because of their structure, because of their goals, So contact us, JR and Firm. I'm literally walking by the road, that's why it's becoming very noisy. So I want to finish this video. Contact us, JR and Firm. I'm based in Hong Kong office, frequently travel to our Shanghai office and Yiwu office, but we will be glad to assist you with your China and Hong Kong company formation and all the related services, bank accounts, special licenses, liquidation, and so on. Thank you. See you in the next one.